Alright, hey traders, John Hal here, of course. I hope you're doing well. I want to do a video for you today and share with you some basically a few stocks that I'm looking at, a few trades that I'm looking at myself, and then going on from that, and plus a few things to look out for when trading the markets. Now, obviously, anything I do say in this video is general advice only. You know, especially right now, especially if I go into the indices and you look at the S&P 500, we're getting very, very, very big swings around, and so just make sure you're looking after yourself. Okay. Now, one thing I do want to say, guys, is you want to be using your tools you're trading with as an advantage instead of a clutter. You know what I mean? So, as you can see, I've got a few things on here. Now, let's actually just point out just one of the things. Let's just say, for example, the moving averages, right? If you've got moving averages on the screen, what are you using that for? What are you using the moving average on the screen for? I like to use the moving averages as support or resistance as well, and also trend direction. So you can see here, right, that I would, on this particular stock, S&P 500 or whatever stock it would be, if the market's not respecting this level through here, like it hasn't been, then you wouldn't class that as a support or resistance level, would you? You can see it breaks below it, and then comes up, breaks above it, breaks down. So you won't use that. And the point I'm trying to make there is you want to try and use these tools in conjunction of what you're trying to look for. And remember, guys, the most highest probability time to be getting in is when the market's moving in a trend, not sideways, and we get a pullback and we get a stochastic like down here, and I'll show you some setups in a minute. But always remember that, okay? The most highest probability trades that I've seen going out there is when the market's in a trend, okay? Like, for example, look at this stock here. Is it that one there? No, not that one there. Okay, this one here, FDX, okay? If you look at this one here, you can see how we were sort of going down through here. Well, below the moving average, above the moving average, below it, above it, below it, above it. You can see the moving average is very tight, below it, above it. It popped back up, got a bit down there, had a bit of a run up, and now it's come back down. So if you're looking at this stock here, right? If you look at this stock here, if you look at down the bottom here on just the chart with nothing on the screen, then again, it's all about looking at the price action first. There's nothing going on here, right? There's nothing going on here. So even if the market's pulled down, the stochastic's oversold, there's no true trend direction, because now it's making lower troughs, right? It's like, yeah, makes sense. So there's no real sense of direction when it comes to that. When it comes to this sort of trade. So what you want to do is, when you're trading the markets, it's important to pick trades of when the market is actually trending, and then pick the scoops on the stochastics. Now, what I mean by that is this: if I actually go back over time and I look at the moving averages, look at this. If I go here and let's just bring up the line. You can see here, right? Like, look at the 20 and the 52, both pointing up. Market pulls back. Look at the stochastic here. Okay, this is the turning point here. Look at it run. Okay, comes back up, comes back down. Stochastic's there, turning point, and then it had a run up. It came back up. It went sideways for a bit, came back up. Everything started to expand, pulled back. Look at the stochastics, and then look at the run. Okay, came back down. That was the low point there. That's the low point there. Look at it run. You know what I mean? And then we started going sideways, chop. And then you started seeing this here. Look at the moving averages come really tight with each other. That's when you start to say, I am not getting involved with this stock until it starts to open up the moving averages. Okay. So right now, especially, we're below the moving averages. So what's that saying, right? We're looking at, this is a 20 moving average and there's a 52 moving average. If it's below that, right, it's saying that things are looking weak. So why would you want to be looking for long signals? You wouldn't want to be, right? You wouldn't want to be looking for long signals. So anyway, that's just a bit of an education for you guys. Look at that, okay? Look at what you're doing there, okay? It's really, really, really important. Anyway, guys, let's look at a few trades that I'm looking at today. That are the setups that I really like. And here is one, GILD. As you can see through here, okay, you can see all through here that the market was basically in a squeezing channel. You can see all the moving averages very, very tight with all each other through there. So you don't want to get involved with that, okay? Wait for the market to break out. It's now broken to the high side, now broken down. Look where the look where this look where the stochastic is, right? So now I'm just looking for a nice little update, bullish update, and that may be a nice little entry signal depending on how big the bullish update is. But that may be a nice little entry signal there. As you can see, right, the market's being on, and this is the key thing, guys. Whenever the market's going sideways like this, don't get involved with it. Wait for the breakout first, okay? You wait for the breakout first, then wait for the pullback. Get the stochastics oversold. This right here, okay? I don't care what else says. This point right here, you want to go long here. You wouldn't buy it here. You wait for a nice bullish update. You wait for the trend to actually change to show you direction. But right here is a much higher probability than trying to go long anywhere in here. Look at this here. Oh, look, that was the high point. That was the breakout. Failed. Came down sideways. Oh, look, bullish update. Look at the bullish update. All right, it's actually, you can see here, right? It actually made trough, made a little higher peak, then a little higher trough, bullish update, and then failed, and then came back up. Look, it's ready to break out again, and then failed. Why? Because we're in a sideways movement. We haven't actually broken out yet. The market's not ready to trend. How do you know when the market's ready to trend? Because it actually already waits. It actually trends out first. Okay, so you can see through this box through here first. You can see through this box. When the market's going sideways and the moving averages are very close to each other, don't touch it. It's not trending. Don't jump on a non-trending stock. Now when the market's starting to trend through here, you can see the trend through there. You can see the 20 moving averages are starting to break up as well too. We're getting space between the moving averages, and now we're getting this point through here. So this is something that's on my radar that I like for moving forward. Very nice setup. Next one is GS. GS, once again, is looking really, really nice. You can see on the weekly chart as well too that it's right on that weekly trend line there as well. Once again, we've been trending up for a little bit now. And yeah, we had a bit of sideways action through here, but you can see the moving averages are pointing up, 52 is pointing up, 20 is pointing up. We've had a pullback, stochastics are down there. This is just having a nice little run. If you have a look at it, it's the flow of the market, right? You can see here, market ran up and then went sideways for a while. Then ran up, came down, created a higher trough, ran up, come back down. It's just in a momentum phase. You just continue moving that way. So that's the next one I'm looking at there. Again, guys, I'm not looking to go long here. I'm looking for a nice bullish update, and that's something I'll be looking out for tomorrow. And also JPM. JPM once again is looking really, really nice. We got the stochastics down there. We've got everything trending up. It's come back down. It's actually come back down to a little bit of support level. You can see there's a little bit of support level there. Not much, but just a little bit. So yeah, guys, once again, you can see here, right, on the chart down the bottom here, and if let me just blow this chart up a little bit so you can see it a bit more. The one thing you're looking at, guys, and that's the reason why I like to squeeze my chart up and sometimes have nothing on the chart, because it gives me a better view of what's happening with that stock. So here you can see the market ran up, created like a bullish flag, then continued up, higher peak, higher trough, higher peak, higher trough, higher peak, come down, bit of a double bottom there. Okay, bit of a double bottom there. But the thing is that I'm still okay with that, because the fact of the matter is that we're still trending. Okay, we are still trending. We've had a decent pullback because of the market, and this is looking for a nice little long entry there. So there's a couple of guys. There's I don't want to make this video too long, but there's a couple of stocks and a couple of things to look out for when trading the market. You're not going to always get it right, okay? But there's just a few things to keep an eye out for to give yourself the best probability, okay? Don't get involved with sideways movement or sideways stocks that are not going to, not going to give you the best out there. So for example, this stock here, LNC, right? You can see very, very, very clear. Look at the moving averages. You can see how this sideways movement has just done nothing. The market ran up. Look at this here, okay? And again, looking at the price action, sideways, the market ran back up, came back down. This little point through here, is this a high probability point through here? It's not, is it? Why? Because the stochastics are there. The stochastics are not near the oversold level. Okay, they're not, right? So then what happens now? Then the market runs down through here. So when the market runs down through here, what is that saying? It's actually now below the 52 and below the 20. It's actually now back in this sideways, this sideways channel again. It's back in that channel again. But now the stochastics oversold. Is this a good time to go long? It's not, is it? Why? Price action first, indicator second. The price action saying that overall we had just one big sideways movement. There's no real, true, strong breakout. Make sense? So if we did get a breakout through here, okay, and then the market ran down through here and then bounced back up, and then we had the stochastics down here, then a different story. Makes sense? So putting a combination between those things can really, really help you with your identification of good entries and yeah. Anyway, guys, I hope you enjoyed this, and I will speak to you soon. Remember, success can be yours if you go claim it. So step up, take massive action, and face your fears today.